Tesla stock just failed at the $450 wall, broke below $400, and is now testing one of the most important short-term zones on the chart. So today, the question is very simple. Is this just a normal pullback, or is Tesla's recent rebound story starting to break down? Hi, this is Ken. In the previous video, we talked about Tesla stock recovering into the $430 range, and the next big question was whether it could break through the $450 resistance zone. But now, the chart has changed. Tesla could not break above $450. After that, the stock dropped sharply, lost the $420 area, broke below the psychological $400 level, and is now trading around the $390 zone. So in today's video, I want to keep this very clear and practical. We are not going to panic, but we are also not going to pretend nothing happened. By the end of this video, you will know the three key levels I am watching now: $390 to $395, $400 to $414, and the $360 to $370 range. First, let's quickly review what changed. In April, Tesla fell into the $350 range, then started to recover. It reclaimed $400, moved back into the $430, and even tested the $450 area. At that point, the chart was improving. Tesla was trading above the 20-day, 50-day, and 200-day moving averages. That was a positive setup, but the key resistance was still the $440 to $450 zone, and that is exactly where Tesla failed. That failure matters because $450 was not just a random number. It was the level that could have confirmed stronger upside momentum. Instead, sellers came in and the stock reversed lower. Now, the most important part is not just that Tesla went down. The important part is what it broke on the way down. Tesla lost the $420 support area. Then it lost $400. Then it fell below the 200-day moving average. That combination is short-term negative. For traders and short-term investors, this means the previous rebound scenario has been damaged. It does not mean Tesla is finished, but it does mean the chart is no longer as clean as it was before. And when a chart changes, our strategy also needs to change. Next, let's look at the moving averages. The 20-day moving average is around $425. The 200-day moving average is around $414. And the 50-day moving average is around $395. Previously, Tesla was above all three. Now, it is below the 20-day and the 200-day moving averages. That tells us short-term momentum has weakened and the market may become more cautious toward Tesla. But here is the important point. Tesla is now near the 50-day moving average, so the $390 to $395 area becomes very important. If Tesla can hold this zone, we could see a short-term bounce. But if this area breaks clearly, the next downside target becomes much easier to see. Now let's talk about RSI. The daily RSI has dropped toward the 40 area. The 4-hour RSI is close to 31, which is near oversold territory. This means a short-term rebound is possible, but I want to be careful here. Oversold does not automatically mean bullish. Sometimes a stock can bounce simply because it dropped too fast. That bounce can still fail if buyers are not strong enough. So for me, RSI is not the main signal. The real signal is price. If Tesla bounces but cannot recover $400 or cannot move back above the 200-day moving average near $414, then that bounce may only be a temporary relief rally. Volume is also important here. This decline came with strong negative volume delta. In simple terms, that means the move down was not just weak buying, it showed real selling pressure. In the previous setup, Tesla needed strong buying volume to break above $450, but instead, we got selling pressure to the downside. That changes the question. Before we were asking, can buyers push Tesla higher? Now the question is, can sellers finally stop? That is a very different market situation. So from here, I am watching three price zones. The first zone is $390 to $395. This is where Tesla is trading now, and it is close to the 50-day moving average. If this zone holds, Tesla may try to rebound, but holding this level alone is not enough to become bullish again. The second zone is $400 to $414. This is the recovery zone. $400 is a major psychological level, and around $414 we have the 200-day moving average. If Tesla can recover this area, the chart starts to look more stable again. But if Tesla bounces and gets rejected there, that would look like a classic lower high setup. The third zone is $360 to $370. If Tesla clearly breaks below $390, this becomes the next area I would watch. This does not mean Tesla must fall there, but it does mean downside risk increases if $390 fails. Especially if the breakdown comes with strong volume, I would be more cautious. So what are the possible scenarios? The first scenario is the best short-term case. Tesla holds $390 to $395, rebounds above $400, and then tries to reclaim the 200-day moving average near $414. That would not fully repair the chart, but it would reduce the damage. The second scenario is sideways movement. Tesla stays around $390 for a few days. In that case, selling may be slowing down, but buyers are still not strong enough. For investors, that means patience is important. We do not need to guess the direction before the market shows it. The third scenario is the weak scenario. Tesla breaks below $390 with strong volume. If that happens, the chart could open the door to the $380 range and possibly the $360 to $370 zone. This is the scenario where I would be most careful in the short term. So here is my view as Ken. Right now, I do not think this is a place to blindly chase Tesla stock. The previous rebound setup has clearly weakened. Tesla failed at $450, lost $420, broke below $400, and fell under the 200-day moving average. That is not something I want to ignore, but at the same time, I also do not want to become overly bearish just because the stock had one sharp drop. Tesla is now near the 50-day moving average, and short-term RSI is close to oversold, so a rebound is definitely possible. The key question is whether that rebound can recover important levels. For long-term Tesla investors, I think this is the main message. Do not react emotionally to one red candle, but also do not ignore what the chart is telling us. Tesla's long-term story around AI, autonomy, robotaxi, energy, and robotics is still very important. But stock prices do not move in a straight line. They move through levels, sentiment, liquidity, and market psychology. Right now, the chart is telling us to be careful, not emotional. So this week, I am watching three things. Can Tesla hold $390 to $395? Can it recover $400 to $414? Or does it break lower and start moving toward $360 to $370? That is the real decision point. For long-term investors, the goal is not to predict every move perfectly. The goal is to understand when risk is rising, when opportunity is improving, and when patience is more valuable than action. So let's stay calm, watch the levels, and think long-term. That's it for today. If this video helped you, please hit the like button and subscribe to Life in the Future. I covered Tesla, AI, autonomy, and the future of investing every day. Thanks for watching, and let's keep enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.